following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and it's my pleasure to be here noon till 1 p.m. Monday through Friday. Of course, Monday is a holiday. Happy holidays. Now let's go through this. This is probably one of the key days in terms of, because the 120-minute chart is still very strong in some of the indices, which says we could still go to a D. It says that the period over this weekend is going to be a period of assessment, I believe, for many fund managers. I have a feeling from just speaking to a couple of people, you cannot use anecdotal, let's put it this way, personal anecdotal stuff as evidence, but I like to use it just as kind of a confirmation of what I think I'm seeing in the charts. And basically, a couple of people have mentioned that they had taken really good gains. They've been long most of last year, and in this recent pullback going into last week, by the weekend, they had taken off quite a bit. Now look at this chart here. Excuse me. Wait until the exact hour before you sneeze. The E-mini is up 12 at 27.46. Thank you. But it's only in a leg B. I say only because in the Chapman wave methodology, if the technicals are starting to improve, if it's done a certain formation, there should be a buy signal that goes to a buy mode, which says you should go to at least 4 higher peaks. That'll be peak D. And we're only in leg B. We still haven't been made. It'll have to be Tuesday, an immediate pullback with no new high above Friday's high would give you a peak. And that would be the Dow, the S&P. E-minis here. So let's go through this. I've got questions coming in. How about, I will take questions, but I want to get through a whole bunch of stuff that I didn't finish over the last 2 days. I think it's important. It's a very important period. A lot of people are saying, gee, what happened? Like a person I spoke to who said, I'm out 80%. I'm going to be away for about a month. I just don't really want to take any chances. And if you're looking at this chart, of the weekly chart, this is just the E-mini. What we're looking at is a chance that there's a nick above the high of last week, which was at 27.6300. We're already at 27.46. And if that starts a gray leg A, and the technicals start to improve considerably in the daily, and remain pretty good in the weekly chart, that's going to suggest two things. It's going to suggest that the rally could continue. It's going to suggest that the whole time that I spent last week talking about the VIX index up in the 50.30 area, and that invariably there's months, if not weeks, but usually months before you go to another crisis, and we kind of run out of crises for the moment. That's what we need to discuss. That's what I'll be going through with my subscribers to my opening call over the weekend. As I get a chance, I will just send out charts like I usually do for Tuesday. I'll start sending them out tomorrow. Now, what is a gray leg A? Oh, a gray leg. Basically, what I always look at, and these are terms that have evolved over the 30 years or so that I've been using the Chapman wave methodology. Basically, what it does is, let me just find this here, take a second. Here it is. Oh, I hope I've still got it. Give me 1 second. Yep, there it is, right there. So it's a very simple concept. Initially, it was a very simple concept. It can become more complex, but the concept itself is simple. Identify the lowest, most obvious low bar. That means you've got to go back a little bit to make sure you got the exact low bar. And then merely count each successively higher peak, alphabetizing them uppercase on the way up, A, B, C, D. At the fourth highest peak, other things can happen. You see this X here, and you see the sharp pullback. Well, to be blue, it means that absolutely we're going to go to a peak D. So I always say if you've come down very sharply, you could fail. This is called a retracement failure mode. That's descriptive. It isn't implementation. It doesn't mean it's not projection. It just says that because you've come down so far, call it the Grand Canyon cliff that you come down, because you've got so much effort to go up, you could fail. You could make that H pattern. So until it confirms with a buy signal going to a buy mode in the technicals, which says, yep, you should go to a D regardless of what the left side is, you're kind of under the spell of that major top. So I call it gray because it just means that it's not a negative, it's an explanation that you're under a previous high. Be careful, you can't fail. That's all. So that's just trying to clean it up. So at D, the fourth highest peak, other things can happen. You can go to E, F, and G. Usually we use an alternate count at that particular point. Don't have to get into it right now. Let me just show you. You went to a peak G at 2878.50 in the E mini. You've come tumbling down to 2529. You had an arch formation, the lowercase h that I always talk about, held just above at 2530.25. And now you've had a huge move up. Peak A, peak B, it's a blue, but it should be gray. It's very close to saying that we could go even higher, but I'm still calling it a gray B because you're looking at that left side peak that I just discussed. That's what you really need to climb above. And then I'm going to say, aha, we've upgraded from a buy signal, which we're in, to a buy mode. And that would mean that the MACD is crossing positive. It's nearly there. It's taken a lot of energy to do that. Stochastic's still very weak at 48%. I'm kind of nervous about that. And that's saying to me, be careful that at any point we could have a sudden sharp slide. Doesn't mean to say give back everything, but a sudden sharp slide. So that's the E-mini. Let me just go through this because now we can go to the nitty-gritties. The Dow. In this particular chart, what we're looking at is the Dow is in a very strong leg B. There's a pattern that I call the Chapman wave falling axe formation. Basically, it's an expanding cone with lower highs and much lower lows. When this trend line gets taken out decisively, it then becomes support, and you could get a one-to-one to the upside, which would take it back to the old high. Meantime, the MACD is improving, not great. It's still stochastic is at 48%. It should really at this point be at 68%. So that's lagging. But the technicals so far are improving, and the weekly chart says that it's a very strong candle inside bar from the terrible candle of last week, but it needs to go above 25,520 to really start a new gray leg A up in the weekly chart. Monthly chart has come back very strongly, and that looks pretty good. 120-minute chart is still looking very good. Parameters, 25,000, absolutely key support over the next week, and 25,500 starts the breakout where I'm going to say probably we're in a buy mode, and we're going to go even higher. SPX, and we are long. We've got two very, very good positions in the Dow on the long side. So you can see what my bias is right here. V-shaped pattern overcoming the arch formation in the S&P at 2747, up 16. Dow's up 168, S&P's up 16.5. Wow, I did not expect this for today, although I did expect that we would hold quite well. I thought we'd have a fairly narrow trading band it is a narrow trading band only because of the wide ones we've had before. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, let me just show you. This is the 10-minute chart. It's going to a leg F at this point at 27.48 in the E-mini. It's above the other resistance levels. MACD is still good. Stochastic's very strong. And it has 27.44 to 27.42 as support, and 27.51 is the next level of 27.50 to 27.51. It's getting real close to some kind of a pullback as I see it. Within the next 10 or 15 minutes, I think we'll be testing the 27.44s. This is 27.49 right now, I think. We'll see. Okay, let's get back to our story. What we're looking at right now is so the S&P 27.22 is the shorter term support. 27.05 is the 9-period exponential moving average, and most importantly, right there, 27.67 is going to be a very strong resistance as I see it. QQQ, this is the this is the PowerShares QQQ Trust Series, still extending its leg A. This is a monster leg A. This is even better than the leg B and C to the downside. So this is at 166.50. It looks strong. The Chapman Wave inside wedge resistance over the next few days will be at 167.50s. It's at 166.50 right now. It has gone over last week's candle. This is very good action. And in the near term, you go 164.50 is very important support. That's near term. Now I'm going to go to the IWM because the IWM is lagging a little bit, but it has gone over the very ugly candles. So at 154.07, it's making more a V-shaped pattern than the arch formation, and it's got 155. What are we looking at? 155.50 as resistance, and 154.07 is where we are. 151.32 is the 9-period exponential moving average. Very good action. So I was asked, would I look at some of the esoteric ones? So you've got the XLK, and the XLK is the S&P Select Tech Spider Fund trading at 67.77. It's making a V-shaped pattern after making a trough C. I didn't put that in. It had a high at 69.19 on the 26. It pulls back to the 61 area, and now it's at 67, a 10% move to the upside. Very nice candle. Weekly candle is really quite good. and the monthly candle has got in leg C. This is good action. I was asked about the SMHs. SMHs doing very nicely there at 103.88. We still have one position left. We took really good profits in the shorts that we had previously, and it gone from the 108.56. We've been short from 106.60s. It went down to 93.88. One of the biggest moves down it's had in just forever. And now it's running quite nicely. In leg B, I think it's still going to lag. I think it's still going to tell us a lot of what's going on for this particular quarter, especially in the semis. Monthly chart is still looking pretty good. Weekly chart has improved. I'm just watching this closely. I would say that the 105s is going to be the big test. How does it break above 105s, or is this very close to some kind of a pullback? So far, the technicals are rallying. This is one to watch. Big support at the 101.50 area. This is the SMH is trading at 103.89, up 88 cents. Now, a couple of things that we want to look at. Gold was weaker earlier. Now it's had a little bit of a rally. It made a leg A. It's pulling back at 13.54, down just a little bit, down one. And the monthly chart is the one that I'm watching closely all the way through February, because if it's able to break above the high that was made in the continuous contract above September's high of last year, 1372, not only does it make leg D, but all of a sudden you're looking at the 1412 area from July of 2016 is beckoning. It's like an inside Chapman wave inside the rectangle formation, inside buy mode that says, hey, I'm going to be going higher. I could make an arch formation going towards the previous high. I should make a D in a shorter time frame. In this case, it's not even a short time frame. It's in the monthly time frame. And the key support that's been holding is 13.11, the 9-period exponential moving average support. So far, good action in gold. Let's look at the dollar. Let's look at the dollar index. Dollar index trading at 88.90, up 27 cents. Yeah, it's trying to turn a little bit. This is that arch formation, 88.44, the low of the 26th of January. We're out of our long position. We've managed to time perfectly all the bottoms, but I have to say I'm getting a little tired of this leg E in the weekly. Really isn't showing very much energy. We'll see what happens early next week, because if it does have a big rally, we're going to watch the euro, EUR, USD, euro dollar currency pair. The dollar really needs to go into the 91 area to have more conviction on the upside. And we've got a leg D in the euro, a leg C in the weekly chart, a leg B in the monthly chart. I think this is a timeout, and I said to someone earlier in the Dan, watch the 123 to 1.23 to 1.22 key support over the next 4 to 5 sessions, and the USD JPY, which was acting just horribly, catching up with the dollar, is still very weak, but it's got a little turnaround candle right here at 106.20. Oh, it could bounce, but it needs to climb and go way above the 107.65 9-period daily moving average, unless it can get to 108.50s by Thursday or Friday of next week. Is just another little bounce attempt. I think I've gotten through everything except we want to look at TLT. TLT trying to rally here. It's up 64 cents at 118.71. It's not made a lower low from the low of 3 days ago at 117.20. What was that? 117.47. 117.47 on the 14th. 117.47. Okay, watching that closely. Any move in the next week below 117 says, uh-oh, yields are going to go much higher. I don't think so. If you look at the TNX, I got a question earlier this morning. Got that D. Remember we were saying, can it make the G to C alternate count? That's how alternate counts work, especially when you've got a Chapman wave inside, a Chapman wave right there. Instant restart. And that's spectacular. That is really good. And you've gone to another D. This is going to be worth watching. 28.7, 2.87 is the high, and is the price right now in the 10-year yield, and 29.26 was the high on the 15th. This is going to be a leg D with a potential doji candle, reversal candle. Oh man, next week's going to be interesting. So we'll see. leg D in the weekly chart, only a leg B and breakout in the monthly. Yields are going to be very important. I'll try to get to my yield chart in a short while. In the meantime, I want to look at crude oil before we go to the break. Another break. Yes. So what we're looking at is crude oil is up 43 cents. Made a peak F in the weekly chart and F in the daily, only a B in the monthly. I'm looking at, I think that that 58 level should hold right here. I'm suspecting that oil could go to the 62.50 area. If it goes into the 63s, that's really good action, but it has to hold 58 as key support. Nice bounce coming. I think we've covered a chunk of stuff. Home builders, HGX should be bouncing. Yep, bouncing a little bit. Home builders bouncing at 336. Yeah, we'll talk about it when we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We're back. Dow's up 169, S&P's up 17. What a relentless market. As relentless on the way up as it was on the way down. And we're going to go straight to Scott in Safety Harbor. Scott, how are you?
Pretty good, Basil. Everything's fantastic. I emailed you on the 12th my prediction on VMC, and we're up about $6 now.
Very good. A very good call. Absolutely. Yes. So, folks, VMC, Vulcan is Vulcan Materials. This is a very interesting thing. Let me look. This chart goes back to 1969, 1968. So Vulcan has been around forever, and I don't know what it is. I've never, ever really done any tracking or I did at one point a long time ago, and that's all I remember. So when I saw the name again, I thought Vulcan, VMC. Wow, that's a name from the past.
It used to be a traders in the spotlight, as you say, in play for a while, and then it kind of went out with the traders. But, you know, to me it was a no-brainer. I mean, it was at 141 on the high. Trump's coming out with all this stuff. I mean, I didn't do any real heavy intellectual. It was just a no-brainer, you know?
Okay, so let's look at it right now. It's trading at 128.90 at a very nice low off the 119s, spikes to peak A, then a B in the daily chart, goes to 134.44, gaps down today. It's kind of holding under the 9-period moving average, 129.01. The MACD is attempting, it's making this kind of W formation. I can tell you this, that as soon as the MACD crosses positive right now, it's minus 0.42. When that histogram 0% line, when it crosses positive, I would not be surprised to see it in the 132.90, but probably close to the 135 area if it's going to be able to do that over the next few days. Stochastic is a little weak, so this is trading kind of off the 200-period moving average, which is at 124.62. That to me is critical. It really needs to hold 124.50. If it closes below that, it says needs a little more time. But I got a feeling you're right, because we too have something in play based on the infrastructure, and it's doing really, really well. Low price stock is in the triple digits. This is in the very low double digits. In the teens, so it has the same kind of characteristic. I think you're right, but I spoke a little earlier.
Why I'm thinking Vulcan, because there's tons you got a lot of listeners out there to think, well, there's 1,000 different ones. Well, back to what I said about it being traders being familiar with it. They're familiar with VMC, and when they hear the word infrastructure, they think asphalt, they think this and that. Yeah, there's a lot of other stuff out there, but traders aren't familiar with it. They're going to go with what they used to do, and they're going to jump back in there.
So your reasoning, and I think you're absolutely correct in the reasoning, and we need to see it now in the price movement, is that it's just starting to become kind of a symbol that you can see by the volume starting to increase somewhat, that is becoming a little bit recognized. But when the fund managers decide that it is infrastructure type things, much more when they really get serious, this should have a play. And once it's in play, then the high that was made, the all-time high, which I only have as a peak C in my monthly chart, leaving still a D to come, the high was at 141.20 on the 26th of January, where most of the market made their highs. This is acting, it's a little too deep, minus 4.48 to 128.99 right now. A little too deep, and it went a little too low intraday. So it says to me, watch out, it's got more like an H pattern. But I think you're correct in looking at this for your type, because you go in and you go out. So you're looking for higher highs, and I think this has the potential to do that.
And I'm still playing with a GE on a tight stop basis, but I'm sure you're wondering, why doesn't Scott mention CX? I mean, they're going to be dumping concrete all over the place. Well, CX got itself out of the loop by all that, anti-Trump propaganda, and we're not going to be part of the wall and this and that, and
well,
it was a terrible thing for them to say, and I think very irresponsible on the part of the owners of CX. But obviously, they're very tight with the Mexican government, so I think he's probably friends with the president of Mexico. So you kind of had to say that.
I think we don't. What goes on inside and what we know from outside. Let's just look at the chart. I think that CX is in play. The way you like to play for quick trades, I think it's going to be in play later on as well. But in the meantime, you're right that the Vulcan is there, and I think it's standing out as something that could do very well. But I wouldn't rule out CX, because it's for your kind of trade, not for a buy and hold, but for those quick pops.
Right.
So yes.
Right. Yeah, I mean, sooner or later, we've heard the infrastructure thing go on for a year or two, but the bottom line is, I mean, whether you're up where you're at or down here in Florida, I mean, every single major bridge in the United States needs repair. But the biggest problem is really not the funds. it's as you know, it's closing these things down is just impossible, and that's the problem.
It is. So yeah, and not only that, you've really got a lot going on in terms of how to in New York. Whenever we go, there's a new bridge and a new this and a new. I don't know how they do it. They put up a most beautiful bridge, the Long Island Expressway. Is it the BQE, Bronx Queens, the BQE it's called Expressway. And they've got a new bridge, and it's really, and the traffic jams and everything. Finally, it's done. Everything's moving much nicely.
Well,
much
thing is,
better. But
we all cut down the unions, and we cut down the $60 an hour for minimum, little jobs and all that. But the thing is, when you do pay people a lot, and they are under that union, those guys work. I mean, I've lived in Manhattan. When those guys are on a project, like you're saying, they get it done, and they get it done now.
Yeah, I don't know. I just know that, boy, the work goes on, and they are doing, it really looks good, and it works well. Hey, Scott, thank you for calling. We're going to be keeping an eye on that VMC. Good eye.
Thank you.
Thank you. Have a good weekend. So, folks, I want to do this just for a moment because of all the, the tragedies that are going on in the schools. I wanted to show this chart. This is a chart of Smith & Wesson. I brought it up a long time ago, and I said, it's really interesting. Why do the politicians say one thing when they want the other? And politicians throughout the last 8 years before Trump were talking about gun safety and stopping guns and fewer guns and this and that about guns. And I'm saying to myself, wait a minute, has anybody ever looked at a chart? Every time there's a statement about guns, guns go higher. So you go in Smith & Wesson, which changed its name to, took me a while to figure this one out, American Outdoor Brands Corps, formerly Smith & Wesson, firearms, etc. The darn thing goes from October 2008. Remember, I'm not talking politically, I'm talking about politicians. The low of 2008 was 1.53. The low in October of 2011, it rallies to about $8, $9, then it pulls back to $2.29 October of 2011. Well, between 2011, if you don't want guns, then maybe you shouldn't say a thing about guns, because everything that was said took the price to $31.19 in August of 2016. August of 2016. And then what does it do? It tumbles from $31.19 down to the lows and is now trading at 10. So I'm going to put this in perspective in a moment, and I think you're in for a surprise. I'll be right back. Basil Chapman talking about...
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
From the 2000 low that at 1.53, that former Smith & Wesson firearms, American Outdoor Brands Core, AOBC is the symbol. This is the monthly chart, and it goes from the 1s and 2s to the 31 area, and now it's trading way down, hit the 200-period exponential moving average. So I'm thinking to myself, you know, politicians, the more they talk, the worse it gets. And then I go back and I look at this and I say, well, wait a minute. During the Bush era, from 2000, you went from 0.09, of course, these are with splits and everything, and then it goes up to about 4, comes back down to 1.15, and then from 1.15 in 2004, it goes to 22.80 in August of 2007. So I'm not sure that I thought, great, what a nice relationship. Yell and scream about less guns, fewer guns, when there are more guns than people in the United States. And look what happens. It goes high, but it went higher in both Republican administrations, Democrat administrations. This is a very complex thing, and I believe it's a cultural thing. I believe that until you make the idea of shooting people and just a huge negative, so that it's anathema even to people who are seriously contemplating in their deepest depression or whatever it is to do this kind of harm. This is very difficult. I don't know how many laws do you have in the books? You know, like 10,000 pages or something. There's something. This is a tough situation. All right, let's get back to the markets and our thoughts for the poor people that just bam from nothing, just sitting there, and next minute you're gone. So I wanted to go and show you something that I thought was quite important within the context of the markets that we're looking at right now. The volatility index weekly chart. Remember, I said I'm not sure it's even possible in such a short period to get down to the 14s or the 15s with the 200 period, the 9-period moving averages in the weekly chart. But absolutely the high that was made just right there on February, is that the 5th? On February the 6th at 50.30. I better put that in there. February the 5th. It just doesn't look historically like we're going to get back there in a hurry. And that says to me that it doesn't mean good times are here again. It does say that there is a cushion for this market at this particular time. And if you look historically with these cup formations, the next cup could be weeks away. That's just looking at it historically. Now, the volatility index does not know. It doesn't see itself. It can't see these spikes to the upside. But the history is that you have at least a few weeks before you start the cup formation going back up again. And that says to me that in terms of levels to look at, let's use the Dow, because I always look at the Dow as an example, that this midpoint that we're in right now, in 25,500, we're at 20,400 right now. But this area right here, 25,500 to 600, maybe 700, that's going to give us a huge wealth of information. Why? Because I'm still looking at some sectors that are absolutely powerful right now. They're refusing every day. There's a pullback, but just a minor pullback, and then they make recovery highs. To me, that's really good. And they did not pull back the way many of the others. So there are some sectors that I've been speaking with, at least for my subscribers, that we're looking at very favorably. And that says to me, you can't go out for the person who went 80% out of the market, even though they were spectacular gains last year. I would have said 60-40. Take 40% off, but keep a chunk, because if you've got that kind of cushion, it's very hard to get back in at those fabulous prices. Well, my thinking here is that it was almost all in IRA type situations that I was talking about. It wasn't the kind of cash position that we were talking about that would be affected by taxes. So maybe there's a different thinking there, but that makes it even more important, I think, to try to keep those really good entrances. So there we are. So now what we're going to look at is a couple of questions. Yes, SLX is still the steel area. Oh my goodness, look at this. New high, new all-time high in steel. Van Eck Vector Steel ETF, we missed it trying to get back into this Vectors. The steel stocks are just on fire. They are looking really good. This is a really good breakout in the weekly. I don't think this is a G. I think this is a brand new leg B in the weekly chart of the SLX, the steel sector. So once you start to see new highs from the recent very sharp pullback, it says that there's a bias in some sectors to use every opportunity for pullbacks to buy, and I think you've got to keep that in mind. XLF has done very well. XLF trading right now. This is the S&P. XLF. Gosh, there we go. XLF trading up 13 cents at 29.60. It's not great, but it says, yeah, this is a sector that even the weekly chart didn't have the MACD cross negative. Stochastic went down to 76%. That's not great, but it's holding a lot better than some of the other sectors. So yeah, be very selective. I don't see any reason why, at least for now, we can't think that this market can continue somewhat higher. Doesn't make all-time highs. Well, here's the thing. The reason why I wanted to grab the positions that we did, when we did since last Friday on the long side, is because within the context of trying to get as close to a low as possible, it means you've got a cushion. Remember when we got the Dow, the diamonds, we got at 56.66, I think it was, on the 6th of March when the Dow made its major low in 2009. That was Friday. On the Monday, the S&P made its low. Well, it gave us a cushion, even though I was anticipating there should be an H pattern. Well, there wasn't. But thank goodness, because we got in so perfectly, we were able to keep the stop. And I think that's the way I'm trying to do it here. We're in position. Let the market tell us if I'm wrong. I don't want to be too clever about this. You get a good price, try to keep the good price as long as you can. And that's really what I'm looking at. Another question came in. Let me just see if I can find it here. It was earlier on. Could I look at Boeing again? Yes, Boeing. This is another example. It hasn't quite made a new high. That weekly chart suggests it really is going to go to at least a D. So yes, the answer is it should go at 358. I think at 361.36 starts another leg up, and in this case it would be a B or a C in the daily. I think that this is very good action. And that's what we want to look at. I was asked about stocks like a Raytheon, the defense stocks. This is not defensive. This is defense. And look at that, breaking out to an all-time Raytheon, defense. Unbelievable. I mean, I always have to chuckle to myself. Here I am. I have a good friend, very dear friend in Raytheon, just the most peace-loving guy you could ever wish to find. Brilliant, brilliant, one of the most brilliant engineers. Top guy. And he's been in for years and years. I'm sure I haven't spoken to him about the stock itself, but here it is at all-time highs.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So we're back. So listen, look at this. This is the weekly chart of the 30-year. It's in leg C. Very strong. The high this week, just let me check this out because I want to see, have we gone above 31.97? 31.79, haven't quite made it, double top-ish. So this is leg C and leg D in the 10-year, and we've just made a leg D in the weekly 5-year. So we're getting really close. I think within 3 weeks, some kind of a top in the yields will be made, but we haven't got there yet. So higher yields, even though I'm anticipating yields are going to stall a little bit here. I wanted to show something. Dave White's done some fantastic work. If I can just get this, let me see if I can get this. Yeah, sector work. We're using what he calls a 9DMA. It's using highs and lows made in the yeah, there we go. So in the different sectors. So what I'm looking at here is if you look from the gray rectangle formation, there are lows, but my big thing here is going to be is the lows that were made, if we've had a change of, in all of these, in the ETF, IYT, you can go through all of them, major move up in this week in these 9 DMAs, in almost all of them, but the prices have moved very differently. Now, the big question to me is, if we've made some kind of a more intermediate term top, will these lows give signals at the top where there is a turnaround that holds the 9 DMA in the middle of the gray areas, but in fact, we don't go to all-time highs in the different indices in price. So this is going to be the big thing. Is there a change? Every time what happened, there was a low, it was a major low in the price, and the price went higher. But the highs never kicked in correctly, not really correctly in most of them. Do we see the inverse now, where the lows are not as important, but the reversal at the high is? I hope I made that clear. That's kind of, I hope it's tough. Anyway, so we're up 125. This is very good weekly action, options expiration. Anything can happen between now and the close, but have a wonderful 3-day holiday. I'll see you Tuesday, and we'll check my opening call. That's my daily newsletter. Check it out. Stay tuned for Steve. You've got Steve, Dave, you've got Tom O'Brien. Have a great weekend.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.